Everyone knows Elon Musk, the entrepreneur, but what about Musk, the investor? Since starting Zip2 23 years ago, Elon Musk has launched 2 more businesses and invested in many others. He's one of the most admired leaders worldwide, gaining respect for his bold ideas and insane drive to see them succeed. In this video, we're going to dig into how Musk has bankrolled his ventures and played the investment game like a boss. We'll break down the bold moves, clever strategies, and some hard-learned lessons from his journey. Let's start with the very early phase of his life. Musk, the early-stage entrepreneur. After dropping out of Stanford in 1995, Musk teamed up with his brother Kimball to start Zip2 using $28,000 borrowed from their father. The idea was to create an online version of the Yellow Pages that included maps. After venture capital firm Moore Davidow invested $3 million, Musk was pushed into the role of CTO, and the company shifted to a B2B model targeting newspapers. With his ownership reduced to 7%, his influence faded, and in 1999, Zip2 was sold to Compaq for $307 million, netting Musk $22 million. In November of the same year, Musk invested $10 million from his Zip2 payout to launch X.com, one of the first online banking platforms. In March 2000, it merged with its main competitor, Peter Thiel's Confinity. Later that year, Musk was ousted as CEO by Thiel, but stayed on the board, and the company was rebranded as PayPal in 2001. By February 2002, PayPal went public, and just 8 months later, eBay bought it for $1.5 billion, with Musk pocketing $180 million. That's how he entered the next phase of Musk's life, where he became an ultimate multitasker. With a flawless record from successful startups, many might have expected Musk to take a break after selling PayPal. Instead, he jumped into a hectic phase of his career, running multiple ventures at the same time. Right after the PayPal sale, he founded SpaceX that same year. In April 2004, he made a $6.35 million investment in Tesla's Series A funding round. While he was investing in SpaceX, he also increased his investments in Tesla over several rounds. Although he didn't found Tesla, his influence grew due to his valuable operational and financial support. In 2006, at Musk's suggestion, his cousins Peter and Lyndon Reeve started SolarCity. Musk provided initial funding and became chairman, continuing to invest in the company through 3 more rounds from 2007 to 2012. The year 2008 was a tough time for Musk and a key moment in his career. He was juggling multiple ambitious projects, but his finances were tight, and the money from PayPal was running low. A divorce also hit him with a $20 million bill that year. Thanks to loans from friends and unexpected returns from his early angel investments, he managed to keep going. Tesla's IPO in 2010 marked the end of this challenging period and helped Musk stabilize his finances, allowing him to move forward with his evolving strategy. With Tesla starting to gain momentum, it was now SpaceX's turn, another phase, which began to see positive results through successful trials and new contracts. The activities of his 3 companies started to connect, creating deals between them and a shared vision of building a sustainable future for humanity. In fact, despite going public in 2012, SolarCity merged with Tesla 4 years later, receiving approval from 85% of shareholders due to clear benefits and integration opportunities. During this time, Musk shifted his angel investments toward AI and biotech startups. He made a notable $92 million return from an investment in DeepMind, which was later bought by Google, and he invested in other companies in these fields, including Halcyon Molecular, Vicarious, and Neurovigil between 2010 and now. His net worth skyrocketed during this period, climbing from $2 billion in 2012 to $19 billion. By 2018, Tesla's share price also soared after the launch of the Model 3, paving the way for mass-market electric vehicles. Tesla shares are still up 881% since 2012, even with recent challenges in the second quarter of 2018. SpaceX, while still private, raised funds in July 2017 at a valuation of $21.2 billion. The rapid growth of his net worth over the last 6 years. Now, let's take a closer look at Musk's investment journey through the numbers. Here is a chronological timeline of his investing activities, detailing both the inflows and outflows. Interestingly, the only major failure in his investment history is Halcyon Molecular, which burned through cash and closed down within 2 years. Among his exits, 2 have been strong successes, Everdream and DeepMind, while GameTrust and One Riot simply returned their initial capital. Currently, Musk is enjoying some huge paper gains from his investment in Stripe. On the flip side, Mahalo, which now operates as Inside.com, has been a long-term investment for over 10 years, and despite several pivots, it seems unlikely to yield a successful outcome anytime soon. Musk fully commits to his ventures, leaving nothing on the table. One big lesson he learned from his experiences at Zip2 and PayPal is the importance of keeping control. When he brought in outside investors and diluted his shares, Musk found himself pushed out as CEO of Zip2. Even though he made a lot of money from the sale, he felt let down because he couldn't shape the company the way he wanted. The same thing happened at PayPal, where he had a lot of shares and was the founder of X.com, but was kicked out as CEO while he was on vacation in Australia due to a disagreement about using Microsoft or Unix for their platform. His disappointment shows in what he has said about these experiences. Regarding Zip2, Musk said, "What they should have done is put me in charge. That's okay, but great things will never happen with VCs or professional managers. They have high drive, but they don't have the creativity or insight. Some do, but most don't." As he moved forward in his career, Musk made sure to keep tight control over his investments. He consistently invested in Tesla's funding rounds to keep his ownership stake. When there was a disagreement at Tesla, he didn't hesitate to give up some financial benefits just to keep control by converting $8 million of preference stock into common shares, which helped him push out CEO Martin Eberhard. Even though he didn't originally start Tesla, Musk's hands-on style allowed him to take on the CEO role in 2008. Musk invests in his network and strengthens it. His early investments were clearly linked to the ideas and founders he knew personally. Overall, Musk has made 9 distinct angel investments, and here's how they connect to his personal network. 2003, Everdream. Founded by Musk's cousin, Lyndon Reeve, who later co-founded SolarCity. 2005, GameTrust. Founded by Adeo Resi, Musk's roommate from the University of Pennsylvania. 2007, Mahalo. Founder Jason Calacanis met Musk through mutual friends Adeo Resi and David Sachs from PayPal. 2007, One Riot. Led by Musk's brother, Kimball Musk. 2010, Halcyon Molecular. Co-invested with Peter Thiel from PayPal. 2011, Stripe. Co-invested with Peter Thiel and later Max Levchin, also from PayPal. 2014, DeepMind and Vicarious. Musk invested in AI to keep an eye on developments, with some connections but not directly. 2015, Neurovigil. No apparent connection. 2016, The Boring Company. This is one of Musk's own ventures. 2017, Hyperloop Transportation Systems, inspired by Musk when he released his famous white paper on the topic. Musk tends to invest in areas he knows and with people he trusts. This approach allows him to have more influence over his investments beyond typical investor roles, thanks to the personal connections he builds. The support goes both ways, as his network has helped him, especially during tough times, like when he was borrowing $200,000 a month from wealthy friends in 2010. The combined efforts of SpaceX, Tesla, and SolarCity often intersect, with Musk at the center of this Muskonomy. These connections happen through shared staff, investors, common goals, or actual business dealings. In recent years, Musk has taken an approach of open sourcing his research ideas. Because he is such a well-known figure, this tactic allows him to delegate research and development, R&D, in a more affordable and efficient manner. For example, in August 2013, Tesla published a white paper titled Hyperloop Alpha, detailing initial ideas for a new transportation system. This was an open invitation for other entrepreneurs to develop the concept further, which led to a wave of new Hyperloop startups. Tesla also supports this initiative through its Hyperloop pod competition. This was a smart move for Musk, who was already managing numerous projects, allowing him to cultivate the Hyperloop ecosystem without doing all the initial work himself. This environmentally friendly transportation method could eventually integrate Tesla and SolarCity services. In January 2017, Musk also invested in Hyperloop transportation technologies, gaining exposure to the venture without needing to do all the initial heavy lifting. By waiting for startups to emerge, he could decide later which ones to invest in. Following the Hyperloop initiative, in 2014, Tesla made all its patents available to the public. This was another way to encourage others to engage in R&D that could ultimately benefit Tesla and save it costs in the long run. The announcement came shortly after Toyota unveiled plans for hydrogen fuel cell cars, which could create competition in the market. By open sourcing its patents, Musk aimed to promote growth in lithium-ion technology and attract customers for Tesla's new $5 billion battery gigafactory. Elon Musk's investment journey shows us how he makes bold choices and learns from his past. Starting with Zip2 and PayPal, he built amazing companies like SpaceX and Tesla. Musk knows how to stay in control of his projects, build strong connections, and find smart ways to fund his ideas. As he keeps pushing the limits of technology, his way of investing can inspire future entrepreneurs and investors. His story teaches us that success comes from hard work, smart decisions, and a love for what you do.